Welcome to this third session on finance for non-finance. In this session, I shall discuss about the techniques to be followed for conversion of financial transaction into accounting entries. In the last session, what I have discussed, a financial transaction is having an implication of inflow of fund and outflow of fund. Today, we shall discuss about how this implication of financial transaction is used to convert financial transaction into accounting entries. Now, what we should do in that, very important, we shall apply the common sense here. Why we should apply the common sense here? Because by applying the common sense, we shall easily able to find out the process by which we shall be able to convert financial transaction into accounting entries. Always remember that the financial transactions, what we do, we have financial transactions are having implication of inflow of fund or outflow of fund. Now, every financial transaction would be captured under the head either profit and loss or balance sheet. But the question is that which financial transaction will go to the balance sheet and which financial transaction will go to the profit and loss. For that, we shall apply a very simple concept. So what is the concept? Any financial transaction that results in permanent, for example, any financial transactions that results in permanent inflow would be classified under the head profit and loss. Now, let us take an example. A business entity is selling goods of rupees 30 lakhs to its customer. This is a financial transaction which has the implication of inflow of fund. Will it be booked under the profit and loss or balance sheet? To get an answer, what we should find out is that, is it a permanent inflow or temporary inflow? Let us take an example. When a business entity is selling goods, his intention is to take return of the goods or not. If its intention is to take, definitely it is, the intention is not to take the return of the goods. So this is permanent in nature. Since it is permanent in nature, so this would be booked under the head income of profit and loss statement. There are a couple of other examples which would be booked under the head profit and loss, and the financial transactions are having an implication of inflow of fund. A business entity registering sales, a business entity is receiving rental income, a business entity is receiving the interest income. So all these three financial transactions are having an implication of inflow of fund which are permanent in nature. So this would be booked under the head profit and loss. Here I am making a point. What is the point? That inflow on account of profit and loss would generally be included under the head income. Now we shall discuss about which category of outflow of fund would be booked under profit and loss. Same principle. If any financial transaction results in an outflow of fund, and this outflow of fund is permanent in nature, that financial transaction would be booked under profit and loss item. Now, suppose a business entity is paying salaries of rupees 2 lakhs to its employees. This is a financial transaction which is the implication of outflow of fund. Will it be booked under profit and loss or balance sheet? Since it's a permanent outflow, it will be booked under profit and loss. Let us take a couple of other examples which would be booked as an under the profit and loss. Business entity incurring salary expenses, business entity incurring electricity expenses, other manufacturing expenses, business entity paying interest on loan taken, business entity paying taxes. So what does it indicate? It indicates that any financial transaction which has an implication of outflow of fund and which is permanent would be booked under profit and loss statement. Generally, outflow on account of profit and loss statement would be included under the head expenses. Now you can see how it is easy to understand which financial transaction will be booked under profit and loss item. Just apply common sense. Try to find out whether this financial transaction results in a permanent inflow or permanent outflow. Now let us take a couple of examples where you will see the financial transactions involves temporary inflow or temporary outflow. Any financial transaction that results in temporary inflow would be classified under the head balance sheet. Let us take an example. A business entity is taking a loan of 25 lakhs from the bank. So these are financial transactions. Implication is an inflow because when a business entity is taking a loan, inflow is happening. Next question what you should ask to classify whether it would be balance sheet item or P&L item, whether this inflow is temporary or permanent. Now, when a business entity is taking a loan, intention is to repay the loan or not? Yes. In this case, the financial results in an inflow which is temporary in nature. If something is temporary in nature, that will be booked under the balance sheet. Let us take a couple of examples again. Business entity receiving loan. A business entity is raising capital from its promoter. So in this case, business entity is borrowing the capital. So it has an obligation to return the money. That is why it would be on the balance sheet. Please note that inflow on account of balance sheet, which will result in future outflow, would be included under the head liability or equity. So in the balance sheet, under the head liability or equity, those inflow which will result in a future outflow would be included. Business entity is selling investment. Now business entity is selling plant and machinery. What do these two examples signifies? It shows that some outflow has happened in the past and now inflow is happening. So what I am saying here, we are giving two examples where previous outflow has happened and now inflow is happening. So here we are making a point that inflow on account of balance sheet, which is the result of any previous outflow, would be included under the head asset or liability as the case may be. So what I have given an example is that any inflow of fund which is temporary in nature or any inflow of fund is happening because of something which has happened, some outflow has happened in the past, this would be booked under balance sheet. Now let us take a couple of examples of outflow of fund which would be booked under balance sheet. Any financial transaction that results in outflow today but would result in future inflow or repaying the previous taken temporary inflow would be classified under the head balance sheet. Let us take an example. A business entity is purchasing plant and machinery. When a business entity is purchasing plant and machinery, this is a financial transaction which is an implication of outflow of fund. So will it be booked in profit and loss or will it be booked in balance sheet? So when some outflow is happening and from that outflow, what is the business entity is generating in future income. So this should be booked under balance sheet. So in this case, intention is to generate future income by using it. So it would be booked under the balance sheet item. So this is an example when a business entity is incurring some outflow of fund. But by using that outflow, business entity is getting something which would be used for generating income in future. So in that case, it would be booked as an asset in the balance sheet. Let us take another example. When a business entity is repaying the loan installment. So what does it indicate? It is basically the payment of some inflow which has happened in the past. So this will also be booked in the balance sheet. Let us take a couple of other examples of outflow which would be booked under balance sheet. Business entity buying plant and machinery. Business entity is investing in fixed deposits. Because why? Today it is an outflow, but in future it would be an inflow. Business entity is investing in equity shares. So please note that the outflow on account of balance sheet, which would result in future inflow, would be booked under assets. So what we say that any entity any outflow which will result in a future inflow, generally it will be booked in the under the head assets. Business entity is repaying loan principal amount. Business entity is repaying the shareholders or promoters capital. So please note that the outflow on account of balance sheet, which is on account of any previous inflow, would be booked under the head liability or equity. In this session, what I have discussed, the general principle of classifying an inflow or outflow into profit and loss or balance sheet item. So what I have discussed, any inflow or outflow which is permanent in nature would be booked under profit and loss item. Example, sales, rental income, interest income would be booked under profit and loss item. Generally, inflow on account of profit and loss item would be booked under the head income. Similarly, any permanent outflow, for example, salary payment, electricity payment, interest payment, this would be booked under the head expenses of the profit and loss item. When an inflow is temporary in nature, which will result in a future outflow, loan taken, equity capital taken, this would be booked under balance sheet. Similarly, whenever there is an outflow of fund today, but will result in future inflow, that would also be booked under the balance sheet. For example, a business entity is purchasing fixed assets, business entity is investing in shares. So this would be booked under the balance sheet. It's a very simple concept. So here, after this session, you have been able to understand what are the principles we follow to classify an financial inflow and outflow into the profit and loss or balance sheet item. Thank you very much for watching.